Welcome to this brand new vlog, and today we are talking about the bear market rally, the phenomenon that is currently going on, and what does it mean. And we will also make some connections to history, to 2008 until 2000, when the dot-com bubble bursted. Now, if you're looking into the stock market, we see that approximately mid of February, the main stock market went down for a deep dive until around 22nd of March, and from then we bounce back, and currently this bounce back, this rally, is a bear market rally. And what does it mean, and how often such things goes on, and how often it comes up? We will talk about it right now. If you are following the stock market, then you should also follow this channel. Make sure to subscribe and like this video for the algorithm. And I would like to show you, first of all, a chart of 1929 to 1932. Now, this is very far away, but it's important to understand the current market and the current market environment, because you cannot copy what happened in the history, but you can make some assumptions and you can make some modeling. And I think this is also very important for you out there. That doesn't matter if you're a long-term investor, maybe you want to know when to invest, when is a good time to invest, or if you are a short-term investor, then you want to trade these up and downs. And for both ways, this is very valuable advice. And therefore, let's dive directly into it. So if you're seeing this chart here, now, first of all, it's going down, right? So we're actually looking into this chart, and this chart is going over 2+ years. And then you see in the very beginning, we had the very deep dive and then a rally for 48% until it went down again, then +12, then it went down again, then +21, then down again, then 27. This one was a little bit faster and faster going up and faster finished. And then we went back down again, and then 35% up and down again before going and hitting some lows there, and then going 72% up. And still, as you can see, this was then around the 75 levels, and we came from around the 350 levels. So way more way to go down. So as you can see, the whole overall situation and trend was way going down over more than 2 years. And within this 2 years, we had 1, 2, 3, 4, 5, 6 bear market rallies. And this is something very normal, because first of all, you have to understand that stocks and the indexes and the stock market in general don't go in a straight line up or down. They are going in zigzags, and the zigzags can take a huge lot of time. Now look at the current zigzag, the turnaround that is currently going on, the rally since the 22nd of March, which is, you know, more than a week away. So actually, let's have a look if this is a measure that went through different kind of timings. Okay, so this is, for example, now the 2000 dot-com crash. And as you can see, the S&P 500 went down about 50% from March 2000 and until September 2002. So you can see this overall turn down is taking years, guys. So it's not like we have a flash crash, then it goes back up. It can go a little bit up, which is then the bear market rally, but then it goes further down. And I believe before we don't have this health situation problem under control, we still will fight the bear market. And I think that more and more things are still upcoming. We have some assumptions, some modeling, but we have no idea at all how this situation will inflect jobless claims on the long run. We don't know how the businesses, especially the small and medium-sized businesses that will represent 99% of whole American businesses, and then we will don't know how big corporation will be affected, and the whole economic situation is very much in question. There is some more and more modeling, and as more issues are going to be presented, for example, recently by Goldman Sachs, as bigger the problem seems to be discovered. So therefore, let's see what's going on in the bag of surprises for us. However, if you're looking into this chart of 2000s, you can see that we had again 1, 2, 3, 4, 5, 6 rallies before we going more and more down. So as you can see, this rallies happened quite in the range of, let's say, 5 to 20%. Also the previous chart that we just looked into also had the same range. So we can expect, as the current situation, that soon we will reach a couple of bear market rally tops, and this can be somewhere around S&P 500 around 2,700. You know, you have technically speaking a couple of residences up and down. Down it's more the 2,450 mark that has to be crossed. If this is going to be crossed, then we see more and more downs, or room to be more and more down. So we should see how this technical analysis works. However, this is just the indication. It much depend what the overall news situation is coming up. For example, the press conference on Tuesday by Donald Trump was definitely further shock or reality bubble burst that happened, and the market are going down. So actually, you know, much is a combination of everything together to evaluate the further direction of the market. However, as I said, I don't believe that this is the bottom yet. So let's look into the last chart here, and this is the bear market rallies from 2007 until 2009. So the financial crisis that happened, just the latest, biggest crash that we had on the stock market before the longest bull run ever on the stock market. And if you're looking into this chart, this is quite nice because it's also showing us the duration of bear market rallies, which is quite nice. You see here 9 days, 14 days, 12 days, 69 days. So over 3 months it went more up. So people surely thought this is the end of the crisis. So this is very much difficult for investors to see, you know, wow, it's now going 3 months in a row back up. This must be the end. This must be the bottom reached already. But as you can see, it went way down from 1,400 approximately. The bear market rally with the 69 days ended, and then we went back down until to 700. So half of it still we lost over there. You know, then we have 26 days, 3 days, 7 days, 4 days, 46 days, 7 days. So even you cannot imagine or even calculate a current, let's say, pattern that you can say, hey, now this next bear market rally will take only 6 days, 7 days. It's totally random. It all depends on the news. Obviously, big bad news in the financial crisis, it was, for example, the Lehman Brothers collapse and Chapter 11 registration of this huge company. A big mistake by then by the US government. So you see the US government is playing a huge role as this as well. We have seen for sure good things that US government did so far. We have also seen things that they did not so well. However, you know, without going into politics, you can see that the bear market rallies is something totally normal. So don't expect that this is already the end, because as you can see in this chart, from the beginning of the crisis, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bear market rallies before even we saw the light at the end of the tunnel, the light at the bottom. And therefore, you know, it's very hard to estimate where is the bottom, but for sure this has something to do also with things that are getting covered up. So how is the economy really going to be affected in numbers? How we can assure that the crisis is not breaking out again after we capture it, and how we ensure that so many people that were jobless now are getting back on track, and how is the current situation with people not having enough money for food, rent and other expenses. And these are main questions we need answers before we can even talk about some bottom here. And I definitely see that you should be very careful in this market. It's very hard to estimate any further move. This bear market rally that is currently going on could be ended yesterday, it can be ended in 2 weeks, or even in 1 month, or even in 3 months, or maybe I'm totally wrong and this is also the bottom. Nobody can tell, not even Warren Buffett. Even Warren Buffett, and I said this in my previous vlog, couldn't say buy America at the right time. He actually said buy American stocks, and everybody thought, hey, this is the end of the crisis, you know, this guy needs to know things that we don't know. But then he made the statement in October, and the bottom of the stock market crash was just 4 months after. So really think about it, that not me, not anybody else can ever time the market. It's about timing the market. I think now you have some attraction on some stocks that are valuable, that will be valuable in the future. You have great deals, but maybe you can have better deals in a couple of weeks. So we shall see. You stay tuned. Thank you for watching. See you tomorrow, and comment below if you need something to leave for me as a message, or if you have any ideas or any video wishes. I will look through them and make you happy, obviously, and I see you tomorrow.